Forget about Reddit, forget about Wall Street bets, and forget about meme stocks. Because investing is all about time in the market. It's not time in the market. Did you know out of all the day traders, stock traders who tries to predict the market? Hello Wall Street bets. Actually, 80% of them lose money, 10% of them break even, and only other 10% actually make some profits. So it's very risky and no one can guarantee you any returns. That's why investing is very important. Hello everyone, Alex is here. I hope you're doing well. I hope you're staying safe and ready for today's crazy video. Where today I'm going to be fighting the stock traders, the day traders. I'm sorry, but this is what's going to happen. Where I think that day trading and stock trading is certainly something you can do and lose a lot of money, or at least something you can explore and see what it is and what's happening there. So stock trading or day trading is the way how people actually try to predict the market and look at the charts and start to sort of make sense of them and all that. It's very complicated, and even with the total understanding what is happening there, no one can predict, can tell you that this is what is going to happen. Because stock market is something you cannot predict, period. And recently there were a lot of noise out of this meme stocks where you can earn millions, gazillions of dollars in 1-2 days, which is great, but that's just 10% of the entire population who actually traded. The other 90% either lost or broke even. They spent a lot of time doing it, they risked it, but they didn't make it to the 10%. That's a bummer. Don't get me wrong here. I still think that Wall Street bets and meme stocks and all this weird thing happening out there is very important, because we are showing that retail investors, actually retail traders, can do their thing, can actually short the hedge funds, they can bypass all these rules and all that. Because before hedge funds were ruling the market, now there are two sides, retail investors and hedge funds, and there's a fight, which is great. And I don't want to get into details of what is happening there. What I just want to tell you guys that investing is something different. And if you are trading on a stock market, if you are doing stock trading, day trading, make sure you actually capture the profit. And the most important rule I have for myself and for my approach of day trading or investing is that only trade that amount of money that you are okay to lose. And if you are seeing some profits on your day trading positions, then secure the profit and invest it. And whatever you have left is your play money, so you shouldn't care about that. Because investing and trading should be also fun, right? So I'm sort of now back to supporting day trading. I'm not doing day trading or stock trading myself. I'm full into investing. I still like to invest in the companies that I think are great in terms of either technology is good or they're innovating companies and all that, or I just like them and use them on a daily basis. Yes, I invest into those, but I'm not investing into meme stocks. I'm sorry. And where I'm getting with all this is that there are two very good stocks on TSX that actually can outperform any of these meme stocks, and they're very stable, risk-free, high potential stocks that have very good financial behind the scenes, and they can potentially outperform the market. One of them actually pays dividends, pretty high yield as well, around 4.4%. So you are going to be getting even sustainable passive income from one of these stocks. Let's get into this and see what we have here. The first one is CargoJet. The ticker symbol is CJT.2. I actually found this stock very recently and I'm very bullish on it because the way their business works and the way the area and the sector this business operates in. This stock had a crazy return over the last 5 years, around 500%, and also over the last 10 years, they returned around 2,500%. This is crazy. And this stock is also lined up very nicely going forward because of the nature of their business. CargoJet is like an essential railroad track, but in the skies. And with all the e-commerce booming over the last years and in the future as well, I think and I believe their cargo business is going to be booming with it. CargoJet actually established themselves as #1 air freight delivery business in Canada. as e-commerce and one-day delivery expectations continue to grow, CargoJet has a very good demand ahead of them, and they also have a pretty good client retention right now, which actually drives their business and makes it grow even further. And CargoJet has their major partnerships with Amazon, which is the largest, the best delivery or e-commerce software or e-commerce platform nowadays, and also Canada Post, which is the largest postal service in Canada. They're also expanding their relationships with DHL to expand their services internationally. This stock is actually down around 20% since the beginning of the year, but I'm very bullish on it and I think it's gonna be growing like crazy over the next decade. Let's see what we have for them from our metrics as of today. Their current market cap is around $3 billion, so the company is sort of in a small business area, but they're growing significantly over the last 5 years and even over the last 10 years. So they keep growing going forward. They also pay dividends. Their dividend yield is at 0.59%. It's not the best, not the highest dividend yield company out there for sure, but they pay dividends. And I think in the future, when they become more sustainable and they reach a certain level of profitability and a certain level of size, they're gonna start actually increasing this dividend like crazy. So this is gonna become one of the best dividend companies out there long term for sure. So I'm bullish on it on the next 10, 20, 30 years because the air business, the air freight business is actually booming like crazy, and this is the way how you transport goods overseas over the long distances, right? And this is the company who is the number one in this business right now in Canada. So we'll see what's gonna happen. As I said before, over the last 5 years, the share price grew by around 500%, and over the last 10 years, the share price grew at around 2,500%. And you would think that this is it, they're not gonna grow more. But what is important to know here, that e-commerce just started getting traction over the last 2 to 3 years. That's where it's booming. And last year was crazy around it because everyone stayed home and just ordered online. But the retention for all these orders online is gonna stay at some level, and it's gonna be improving more because people will start realize that actually buying stuff online is actually very convenient and you don't have to go anywhere and you actually get what you think you're getting. So that's why it's gonna be only improving going forward. There are better parameters at 0.59, so it's definitely a volatile stock over the short-term period. But for me personally, I invest in the company for the next 20, 30 years. So I'm looking for a long-term investment for this stock. Their current share price is around $177, so it's definitely not the easiest company to enter, and it's not a super affordable stock to have in your portfolio, but you can get there over time. So the hardest part is to start investing. So if you're not planning to invest in this stock right now, add it to your watch list and keep an eye on it. I bet that they're gonna be showing some crazy returns, some crazy numbers in their next financial report. And again, with e-commerce booming like crazy and getting a pretty good chunk of the entire retail, for example, in Canada in 2018, it was around 4% of the entire retail, and now in 2021, it's around 11 to 12% of the entire retail. So there's a huge potential for e-commerce in the future, and CargoJet actually can capture a pretty good chunk out of it. So I'm very bullish on this company. Make sure you add to your watch list and look at it for the next little while. And the next stock is going to be the one that can substitute any of the Reddit stocks, any of the meme stocks, because this is something that I'm very bullish on, and it's going to be paying you dividends on top of that, which is the Brookfield Infrastructure Partners. And the trigger symbol is BIP-UN.TO. And Brookfield Infrastructure is actually a leading TSX gross dividend stock. For example, if you earn Brookfield Infrastructure for the last 10 years, you would be getting around 500% return over that time period. And only 300% of that is going to be in the share price representation, and another 200% is going to be in dividends alone. Because their dividend increase, dividend growth rate annual over the last 10 years is around 10% every single year. This is crazy. And Brookfield Infrastructure has a very diverse array of assets. Investors get exposure to everything from railroads to export facilities to cell towers and data centers. The great thing is that a large majority of its assets are contracted or regulated, so cash flows are very predictable. Not only that, but around 70% of these contracts include inflation index rate step-ups. This is great. This is what's gonna keep up with their dividend payments and dividend increases. And the company is not only investing back into their business in order to grow it, but they're also investing and acquiring other companies in order to grow their business. So it's a two-way stream, the way their business is structured. Let's see what we have for Brookfield Infrastructure in our metric. Their market cap right now is around $20 billion. So it's a huge company. They're not going anywhere and they're going to keep growing going forward. Their current dividend yield is around 3.7% and their 5-year average dividend yield is actually around 4.4%, which probably tells us that the share price right now is a little overpriced. But if you go with the dollar cost averaging approach, you shouldn't worry about that at all. Their current payout ratio is around 400%. So this is a little worrying. So I'm looking forward to their next financial report to see what's going on and what is actually done to improve it. The dividends are paid on a quarterly basis, so you should expect the consistent dividend payments every single quarter. And regarding their share price, as I said before, over the last 10 years, it grew by around 300%. That's just the share price. And also the dividends returned you around 200% over the last 10 years. This is great. So the combined, the total return is actually around 500% over the last 5 years. This is what consistency looks like. And this is why these dividend companies who are consistently increasing their dividends are very good for you and very good for compounding growth over time. And if you would like to set up automatic dividend reinvestment plan, DRIP, you can do it. You would need to invest around $8,700 into this stock in order to get enough dividends back every single quarter that you can use to reinvest and get another share of Brookfield Infrastructure Partners stock. They're a beta parameter at 0.78, which is not bad and it's not very volatile over a short-term period as well. And as of today, their share price is actually traded at $68.50. So it's a pretty affordable stock for all the new investors. And if you are thinking to invest more into this company, you can do it right now and you can set it up by a dollar cost averaging approach and invest regularly every single week or every single month. Depends what best works for you. And instead of betting on meme stocks or Reddit stocks and hoping that you're going to be in that 10% of traders who actually win and get some profits out of it, my view on this is that you need to consider time in the market, not time in the market, and invest in the companies that actually have proven historical returns over the last decade or 5 at least years, and also that can have pretty good balance sheets behind the scenes and also very nicely lined up going forward, so you can be sure that if you invest for 10, 5, 15 years ahead of you, you're going to be good with these investments. This is my approach, this is what I do, and what you're going to do is up to you. With all that, thank you for watching. Don't forget to smash that like button. That's going to help me a lot. That's going to help everyone else because they're going to see this video. And all the best for you. Keep investing. I'll see you around. Cheers. Bye. Wall Street Bets.